Good afternoon and welcome to our conversation. And today's topic is we would like to understand one of the government's very popular schemes that is called PMSVANidhi. This is a finance for the people at the bottom of the pyramid. To take us through this particular scheme, I'm very happy to say that today we have Sri Ratnakar Panigraghi, who is a Managing Director of Siddha Development Research and Consulting. Good afternoon and welcome, Mr. Panigrahi.
Good afternoon, Professor Ramana.
Thank you very much for joining us. Can you please briefly introduce yourself to our audience?
Thank you. Well, I am Ratnakar Panigraghi, and I consider myself to be a student of both sociology and management science. For the last 2.5 decades, I have tried to contribute towards the larger agenda of enabling social change initiatives through technology solutions, research-based advocacy, and enabling access to government services, particularly to the disadvantaged and the people at the what we call the base of the pyramid or the bottom of the pyramid.
Wonderful. Thank you very much, Mr. Panigrahi. As you know, that Government of India had launched a very exclusive scheme for the benefit of the street vendors, popularly known as PMSVANidhi scheme. Since you have been working with the people at the bottom of the pyramid for quite some time, kindly take us and briefly explain this scheme to us.
Right. So, as you rightly pointed out, this particular scheme, PMSVANidhi, it's an acronym which actually expands to Pradhan Mantri Street Vendors Atmanirbhar Nidhi. So that's the expanded form. And this scheme was launched sometime in June of 2020 in the backdrop of the economic recovery initiatives that the government took in the context of the COVID pandemic. As we all know, the entire world has struggled through two crucial years. And much of the significant impact has been on the street vendors who had a very difficult time because of the lockdowns and shutdowns. So this scheme was designed to provide them with immediate relief from the challenges that they had faced, the economic hardship that they faced, and the idea was to benefit almost 1 crore of the street vendors that are there across India and to provide them with certain benefits under this scheme.
Thank you very much. There is often, whenever people talk about PMSVANidhi, so the first question comes to mind is, confusion regarding, is this a subsidy or this is a subsidized loan? Is it a direct cash subsidy given, or is it a loan given to the street vendors?
Right. Actually, Professor Ramana, it is a part of both. May I say it's a composite scheme which includes a direct subsidy component or a cashback component, as well as a subsidized loan amount. So the basic structure of the scheme is such that the street vendor is eligible to avail an initial loan of, let us say, 10,000 rupees. There are two further installments that are possible once the person repays the 10,000. The second slot being 20,000 and 50,000. Now, for the 10,000 rupee initial loan that the person would avail, there is a 7% subsidy on the interest amount. So that's the interest subsidy. Okay. Besides that, the person is also eligible for a cashback of 1,200 rupees in their account if they engage in digital finance. So I would say they're both the components are integrated into the scheme.
That's wonderful. And we are told that there are 3 different levels in the scheme. level 1, level 2, level 3. Can you please elaborate these levels 1, 2, and 3?
That's right. There are indeed three levels. So the level 1 is the introductory or the base level, wherein the intent is to enable a quick access to instant loan, primarily to meet the working capital needs, so that they can go for current assets or meet their current liabilities. Then if they successfully repay that loan, which is incidentally for a period of 1 year. So within that year, if they repay the loan, then they will be eligible for a repeat loan of 20,000 rupees. And if that loan is also repaid, then they're eligible for rupees 50,000. So essentially, the intent behind this is to encourage street vendors to get mainstreamed or linked in terms of the government financial mainstream banks, and develop a credit history so that they can subsequently avail larger loans under other schemes such as Mudra.
Okay. So can somebody go to level 2 or level 3 without getting into level 1?
No, the level 2 is unlocked only upon successful closure of the loan availed in level 1. So this is precisely the idea, to teach due diligence and financial discipline to instill these ideas with the street vendors. That is how the scheme has been designed.
Okay, so some say that there is certain invisible cost. Is it true that there is an invisible cost to the street vendors if they avail PMSVANidhi scheme?
Professor Ramana, the cost that comes to my mind is in terms of the amount of effort one would take to apply for this loan. Besides that, there is no other charge in terms of any applying fees or any other government fees for that matter. So from
Okay.
a application point of view, there isn't any other cost besides the time spent.
Okay. And so because there are thousands of vendors in every city, and as you rightly mentioned, millions at the country level, how do you think that this scheme is actually executed? So can anybody walk into a bank and say, I'm a street vendor, so give me PMSVANidhi? Can you just briefly tell us about the mechanics of availing PMSVANidhi?
Right, Professor. So basically, the whole idea is the scheme has been designed to make it as convenient as possible for the street vendors. The application process is completely digital. It's a straight-through process. As we know that the scheme is available only to street vendors who come under urban local body limits. So it could be a municipality, it could be a municipal corporation, or it could be a notified area council. So any street vendor who is vending within the municipal limits is automatically eligible to avail the benefits under the scheme. So the basic process is one needs to go to the website and make an application, which there is no cost involved. Either I could do it myself, or I could take the help of let us say a common service center kind of a mechanism through which we can do the application process. Initially, there was a lot of challenge because the implementation of the underlying act which identifies the street vendor, which is the Street Vendors Protection of Livelihood and Regulation of Street Vending Act of 2014, it was seen that this act was not uniformly implemented across the states and union territories. When I say not uniformly implemented, I mean that the scheme and the rules which were supposed to be notified by the respective legislative assemblies of the state and UTs, that process was having inordinate delays. So because of this, the identification of the street vendor was a major concern and a blocker for the street vendors to avail this particular, avail the benefits under this scheme. So to avoid any inconvenience, a new mechanism was introduced, which was called the letter of recommendation. So even though the street vendor is not registered under the municipal corporation or the municipal council, they can apply for a letter of recommendation to the particular council, and on the basis of that letter of recommendation, they can go ahead and apply for the loan. Once the municipality will vet the street vendor as bona fide and authentic, then the vendor can apply for the loan, which is also an online process. And once the loan application is done, then the disbursal is made directly into the bank account of that vendor through the particular bank of their choice.
Okay, that's clear. So if I understood properly, that it is anybody can apply provided they have LOR or the license. So, but one thing has come out that you said on the basis of your explanation. Can I say that no smartphone, no PMSVANidhi?
The dependency on a smartphone is actually not there. The application process can be made from a regular computer using the World Wide Web. So I need not necessarily have a smartphone. The only dependency is I need to have a phone with a valid mobile connection on which I will receive an OTP. So the one-time password, which is a security feature to avoid fraudulent use. So that's the only reason why I need a SIM card and a mobile number, which will work very well even on a feature phone. Per se, technically speaking, a smartphone is not a necessary criteria.
Okay. So similar doubt is, suppose I'm having a bank account in Odisha State Cooperative Bank. So is it necessary that PMSVANidhi money will come only to my Odisha State Cooperative Bank, or can I go to State Bank of India and ask them to give me loan?
Right. So the way the scheme has been designed is for the convenience of the street vendors. Usually they are given the choice to pick the bank, to specify the bank through which they would like to avail the loan. And most of the banks, they have a comfort factor if the street vendor is already an existing customer, has an account with them. So if I have an account with, let us say, Odisha Cooperative Bank, I can choose that bank while applying for the loan, and the money can be directly credited to my Odisha State Cooperative Bank account. Incidentally, all types of banks are covered under this scheme, including the public, the scheduled banks, the private sector banks, regional rural banks, small finance banks, non-banking financial companies, microfinance institutions, as well as SHG banks. So the idea is it is all comprehensive in terms of any avenue of financial mainstreaming has been covered.
Okay. And in the beginning, you said that there is a component of cash back. There is an amount of 1,200 rupees is actually given back to the street vendor. I missed that point. Can you elaborate? How will a street vendor get 1,200 rupees back to his account?
That's right. So this is actually a point which many people, in fact, do miss out, and this creates a lot of confusion. So basically, this is how the cashback works. Now, if let us say I am a street vendor who has availed a loan of rupees 10,000 rupees that I need to pay in 12 installments, assuming a rate of interest of 10 rupees, a 10%, then the interest that I need to pay will be in the region of around 1,000 rupees. So this is the interest due. Now, under this scheme, if every month I do digital transactions of at least 200 number, either buy or sell, to the account related to my business. So if I'm doing 200 digital transactions in a month, which means roughly 8 or 9, I think 7 transactions a day. So if I'm doing 7 transactions per day, I will be eligible for a cashback of 100 rupees per month. So if I do that consistently for a year, I will get 100 times 12, which is 1200 rupees. I have paid an interest of 1000 rupees. On that, I get a 7% interest subsidy, which means 70 rupees is discounted, which means I'm actually paying 930 rupees. And on the other hand, I have received a cashback of 1200 rupees. So the net interest is actually negative here. I have earned money by taking a loan under PMSVANidhi. So the important fact here is I need to make digital transactions of at least 200 in a month, which sometimes people miss out, and that creates a lot of confusion.
Okay, I think that may be the reason why you also mentioned that PMSVANidhi scheme creates a digital history or digital track record for the vendor. Am I right?
Absolutely, Professor Ramana.
So what is the benefit of having a digital track record for a street vendor?
Yes, this is an extremely crucial link in the missing puzzle in terms of access to credit from the financial mainstream. Now, whenever a street vendor who typically fall under the informal economy, they do not have a registered history or taking any secured loan or loan from formal sources, which means their credit history or their CIBIL score is non-existent. In this case, usually banks bulk or they kind of are unsure in terms of the credit worthiness of the street vendors, in spite of the fact that they have a very high turnover and the amount of churning in terms of the transactions is very significant. So if they are able to demonstrate over a course of, let us say, in the first year, that they have been diligent and they have been persistent in doing these digital finance transactions, it naturally leaves a trail, and that will provide evidence for their credit worthiness, and consequently banks will be more comfortable. There will be a huge confidence factor in extending a loan of a larger amount to them.
Oh, that's very interesting. I think so. In the process, you're saying that PMSVANidhi motivates and encourages the street vendors to do business digitally, both transactions, so that they get benefit, and also you create a digital history for yourself. Am I right?
Absolutely, Professor Ramana. In fact, team is standing on 5 pillars.
Okay.
First pillar, 5 C's, if we can call it. The first C is convenience, which we already discussed. Now, the entire loan application process is online, no fees, and it's a straight-through process where they can directly go for the application online itself. Second, we covered, which was access to credit from multiple sources. Third was the credit history, as we just discussed. The other 2 C's are credit guarantee, in terms of the banks also have a strong confidence to provide the loans, because the loan is covered under the credit guarantee scheme. 32% of the loan amount is covered under the credit guarantee scheme. And the last one is convergence, wherein government is trying to ensure that through this scheme, which is an entry-level scheme, other benefits can also accrue to the street vendor. So it's a very comprehensive scheme, if you ask me.
Okay. Okay. And you mentioned that you have been using the word government all through the conversation. So is this scheme a state government scheme or a central government scheme? And if it is a central government or a state government, under which department this falls?
Right. So basically, this scheme will be classified as something that we call CSS, centrally sponsored scheme, with a certain component of the burden, which is also borne by the state. And there are differences in some, for some states, the division is 60-40, 60% by the center, 40% by the state. For other states, such as the Northeastern, it is 90-10, 90% borne by center, 10% by the states. And in some other places, it is completely 100% is borne by the central government. The scheme is implemented by the Ministry of Housing and Urban Affairs at the central level. So at the state level, we will have the state equivalent. And for instance, for Odisha, it will be the State Urban Development Authority, SUDA, which will be vested with the responsibility of implementing it through the urban local bodies.
That's great, Mr. Panigrahi. Based on your experience, because you have been doing this, talking about this scheme and also creating awareness of this and also helped people to avail this loan, what is the response and reaction of the street vendors on the field?
Right. So the initial reaction has been extremely positive. People find this scheme as a life savior, particularly if we situate it in the context of post-pandemic recovery, where access to credit was a serious challenge for them. So this really gave them the much needed oxygen to get back on their feet. But the access to this scheme is still not universal, in the sense the target versus achievement, there is a huge gap. In fact, the scheme was supposed to end sometime in 2023, but it has been extended by one more year. So hopefully more people will be able to avail the benefits, and it will yield the dividends as it was supposed to.
That's great. I think, Mr. Panigrahi, you have taken us through the scheme, the features of the scheme, the benefits that scheme provides to the street vendors, and we liked the 5 C's of the scheme. Just briefly tell us at a country level, at all India level, can you just throw some light on the numbers of street vendors, the amount of the loans that have been disbursed under this scheme as of now?
Right. So, Professor Ramana, right now, I think the eligible applicants would be somewhere in the region of 50 lakhs. Now, the eligibility is decided based on a proportion on the urban population, which will range from a minimum of 0.75 to 2.25% of the urban population. So that is the basic thumb rule based on which the calculation is done. So out of the identified street vendors or the street vendors who have applied for LOR, so presently out of this 50 odd lakh, I think around 38 lakhs have already received the benefit under the scheme at a national level, amounting to almost 7,000 crore of sanctioned loans, out of which 6,500 crores have already been disbursed. At a state level in Odisha, around 86.8 thousand applications have been made, directly benefiting around 38,000 beneficiaries, out of which 68.8 crores have been sanctioned and 67.3 crores have been dispersed at this point of time.
That's a significant amount, and that's great to know that an exclusive scheme has been designed and created for the street vendors, and people like you and many activists at the bottom of the pyramid are trying their best to bridge the gap between the scheme and the people. But it's wonderful listening to you, Mr. Panigrahi. And we take this opportunity to thank you. And also, we wish you all the best for taking this scheme to more and more street vendors. Once again, thank you very much.
Thank you. It was an absolute pleasure to be a part of this podcast. Thank you so much.
Thank you very much.